Thank you for tuning in. You're watching the market live on DT. Now it's Tuesday morning. It was an impressive Monday. After an impressive Monday, are we in for a terrific Tuesday or are we in for a nothing sort of a day? Well, as we walk into trade this morning, the word which in a sense really captures the global mood is stability. Global markets are stable. No news sometimes is good news. S&P, Dow, Nasdaq, markets which matter, they essentially had a print of green. Nothing incremental or nothing detrimental has come on the tariff front. The Asian markets which have opened so far, they are also showing signs of energy. The confusion and the chaos between China and US still continues on which way the trade talks are moving. But needless to say that the market of late is, at least Indian markets of late, they have moved from strength to strength. It's all about liquidity. It's all about that patch in the market where nobody wants to sell. IPOs are not there. Promoters block deals are not there. So it's looking good and looks like it may look good for an extended period of time. So for the moment, if I may just use that classic line, it's the sun which is shining and make hay when the sun shines.
Yeah. And hopefully earnings to our rescue. Some good numbers there. Of course, today is going to be the big one. That's Bajaj Finance, FinServ, you've got Trent and a whole host of mid-caps. Earnings so far, by and large, have been either in the price, case in point being IT, or they've actually been better than expectations.
So Asha, we are in this phase of the market where there is sometimes no news is good news.
Yeah.
So that's one.
Yeah.
Second, that 90-day becomes this window in which you know that nothing detrimental or incremental will come on the tariff front. So you may call it a 90-day pause, you may call it a 90-day window. I think that 90-day factor is at play. C, and which I think is the most important factor which is at play, is that nobody wants to sell. DIs are buying because of SIP and inflows. FIs are back, and FIs are back with a bang. And then IPOs are not really at play, which could suck out liquidity from the secondary market. And then the promoters at these levels, they perhaps are not really inclined to sell the market. The only difference here is that the rara feeling in the market is missing. Volume activity in the market is not there. Not everything in the mid and the small cap space is moving. So the big departure between last time when we saw this kind of a price action versus now is that nobody wants to sell large cap stocks. The activity in the mid and the small cap space is dull and dry, and it is not news. I think it is a simply turn in the market where lack of selling is really taking the markets higher. Earnings are okay. They are not bravo. You can't say the word wow. Valuations are not cheap. They are, after the rally, they are reasonable and expensive in some pockets. I think it's a realignment of the global money which is happening at the FI level, which I think is the real driving factor for the market. So you're going through the phase of the market where nobody wants to sell. So make money as might as well.
So don't sell and go away. Don't follow what actually May tells you to do. But yeah, lot of saving graces in Reliance that managed to hit a 6-month high. It's been a market cap addition of nearly about 1 lakh crores that it's actually seen in just the first session after its numbers. It's contributed a good over 100 points to the Nifty move in yesterday's session, and it has been a big lag. So yeah, why not play catch up?
Yesterday was only Vimal, if I may use that classic line to define Reliance, only Vimal. It was only Reliance.
Nostalgia.
Yeah. I mean, actually, they no longer own the brand now.
Yeah.
The identity of Reliance, the first consumer identity was only Vimal, and then they actually sold it out. I mean, imagine Reliance was actually in polyester company, polyester yarn to polyester suitings to men's fashion, and they've sold out their business. Yeah. So that's Reliance for you.
Yeah.
Okay. But what happened yesterday? I think Reliance was underperforming, and Reliance is underperforming. The numbers were not wow, but the numbers have changed the way how the stock actually would move, which is from underperformer to market performer. See, how do you look at large cap stocks? Aisha, it's very simple to look at large cap stocks. You say whether they will outperform the market, whether they would underperform the market, or whether they would be market performer. I think Reliance now changes its rating or it's positioning from market underperformer to market performer. It's not going to be an outperformer. So yesterday's underperformance in Reliance is nothing else but simply a markup of what the recent leg of underperformance has been. And let me establish that, which is, let's look at the 1 year change in Reliance and let's look at the 1 year change in Nifty. So in last 1 year, Nifty has done nothing special. That's Reliance for you, still down 6%. This is after yesterday's 5% move. And Nifty is up 7%. So I think Reliance has to catch up. Reliance is not going to be like a outperformer. It is going to, HDFC Bank has become an outperformer, right? Reliance has to become a market performer. But for stock to become market outperformer, it has to check on the market underperformance. So that underperformance of 5-6%, that has to get adjusted. And I think some of that got adjusted yesterday. Some of that will get adjusted going forward. But the message from Reliance or from banks is that there is good sectoral rotation at play and under-owned sectors are coming back, which is banks led the rally. They did not do anything. Reliance underperforming stock led the rally. So this leg of the rally, you need to look at not the outperformers of the last rally, the underperformers of the previous rally. Reliance, banks, maybe construction, hopefully you could see action moving back into select consumer stocks. So it's the other end of the market which in a sense is riveting with action, and that is a message that the musical chair is on, whether you want to use the word musical chair or sectoral rotation or catch up, whatever may be your phrase line or tagline, that is the trend which is at play. So the trick is now to identify the next pocket of large cap, which in my book could be the L&Ts of the world. That is where I think seamless action could move.
Yeah, there is concern about L&T as to their global exposure for their business. But let's see this time's earnings and the kind of commentary that the management actually comes out with. It's going to be extremely critical, as would be Bajaj Finance and many others. In fact, 8 important numbers to track. So not just you've got Bajaj Finance, which we'll of course discuss in greater detail. You've also got a BPCL, you've got Ambuja Cements, you've got Trend, Bajaj Finserv, there's India Mart, Jana Small Finance Bank, and Punjab and Sindh Bank, along with Vishal Mega Mart, which are also due to declare their numbers. For Bajaj Finance, of course, the big trigger came in when they not just announced the earnings date, but the fact that they're going to be mulling a stock split and a bonus as well. So the stock began its uptick from that day onwards. But yes, the earnings as well, and we are anticipating a healthy new customer acquisition along with new products. We're expecting the margins, though, to contract a little bit, about 5 to 10 basis points on a sequential basis. Interest expenses, what we're penciling is that they're supposedly to peak out. Credit costs will decline. Collection recoveries are going to improve, especially in the personal business loans as well as sales. And yeah, the stock split, I think that is what's keeping the stock warm on the street.
Yeah, Aisha, see, stock split is something which makes a stock affordable. Bonus is something which technically is a book and entry. It is an endorsement that the management feels that they can serve or service a large extended equity capital. What really matters is that Bajaj Finance in a tough liquidity environment has managed to do exceedingly well. Last 2-3 quarters were tough for NBFCs. Bajaj Finance did exceedingly well and the stock has done exceedingly well. I mean, a 30% surge in a large cap stock which was expensive, I think is extraordinary. So will this extraordinary feat of outperformance and delivery, will it continue from Bajaj Finance? Which means that for stock now to go towards 1000 or even 9500, they'll have to do something special, which is that admit and acknowledge that the worst of liquidity print is behind us, their costs are coming down and they're gaining market share or something on the technology front. You need something new to incrementally come from Bajaj Finance for the markets to get convinced that the re-rating actually will happen. I don't think earnings would be a challenge because you pretty much know the quarterly update, what they're thinking. So we know the large flavor of the numbers. I don't think there would be a surprise coming in there. But what markets would like to understand from them is that how will FY26 be better than FY25? What are the incremental levers at play in terms of your NIMs? And what exactly can be done to ensure that in the near term, the markets in a sense get convinced that Bajaj Finance is completely reorienting themselves with each passing phase. So I think it's those factors which it is not subjective factors or it is not numbers. I think it would be really the tone and tonality of what FY26 could look like and what is the new thing they can add. It's a stock which is going at a supersonic speed, and for a stock to stay at a supersonic speed, you need to keep on adding more and more fuel in it. What is that new fuel? That fuel cannot be Q4 numbers. It really has to be something different.